All right, so some news this week, pretty impactful and involving CMHC. First of all, a lot of people hear that acronym CMHC. It's a pain in their butts because they got to pay extra money when they're getting their mortgage.
Oh, yeah.
And a lot of people don't even know what it is.
Sometimes people use CMHC as a bad word. I don't even know.
That's right. So
even though it's an acronym.
That's right. So before we get into the news about CMHC, and it's pretty impactful, give everybody a little lesson on what CMHC is, and then we'll talk about what happened this week with CMHC.
CMHC is actually an acronym for the Canadian Mortgage and Housing Corporation. They're a crown corporation that does a bunch of different functions. But for what I talk about, their primary function is around giving lenders high ratio mortgage insurance for borrowers. So it's required to have this high ratio mortgage insurance for any purchase that a client does in Canada with less than 20% down. You're required to have high ratio mortgage insurance. There are 3 insurance companies in Canada, CMHC, which is a Crown Corp. There's also Sagen and Canada Guarantee. Last year, when the pandemic struck, CMHC, in their great wisdom, basically changed their underwriting policies to require a higher credit score and for borrowers to have a lower level of indebtedness in terms of what their debt service ratios were, in terms of what their payments to their income look like. It was tough, and I think it negatively impacted borrowers in more rural areas of Canada, which really, this is their mandate to provide, an avenue for people to get into home ownership. And early this week,
Before you get into that, why did they do that? What was they said to cool the housing market.
They were trying to cool it because I felt it was overheated and there was no room for it to go. And they were also concerned around what the implications would be to the economy from the pandemic.
So too much risk, perhaps? They were concerned about risk and exposure.
Exactly.
As well.
And because really, at the end of the day, this is the government backing, essentially, mortgage loans to banks. And they were concerned that there was going to be mass losses. A lot of people losing their jobs, not being able to pay their mortgages. They thought maybe home values were going to go down.
So they'd be on the hook for a lot of this?
For any insured mortgage, when a borrower defaults, if they have insurance from the Canadian Mortgage and Housing Corporation, they will pay the lender for any losses.
Will they recoup that if, in fact, when the property is repossessed and sold?
Yeah, they'll recoup it, but if it's sold for a loss, then they will make a payment to the lender.
They have deep pockets. They've only got so much capacity as well to pay this if it were.
Well, here's the thing.
Yeah.
Technically, they're an insurance company.
Right.
So they actually have a lot of funds on deposit. And CMHC is actually so profitable that they do transfer payments back to the federal government. They actually have paid the federal government back millions and billions of dollars over the years because they're so profitable. At the end of the day, CMHC is in place to help borrowers become homeowners. But really, it's a business and it's an insurance company. And, that's one function of their business.
Okay.
And they were concerned. They made their underwriting policies more challenging. But guess what? The other 2 private insurers did not change their policies. So if anything, the private corporations were more, in business with Canadians than the federal government agency.
Are they less expensive? The private
same price.
Ones? Same
premiums.
rates?
Same rates.
Wow. To me, it seems strange that you would have a Crown Corporation, which was once, I think, a standalone, the only option, was it?
It was the only option, and even when there were other players in the market, they still had the bulk lion's share of the actual.
Right.
But now the tables have turned.
Yeah. So to me, it seems strange that you would have a Crown Corp in this sphere, and then private insurers as well. That's odd. Has anybody ever thought that CMHC has, because it's a Crown Corp, it's an unfair playing field, or how do you compete with a Crown Corp?
I think at one time probably the private corporations did think that, they found it challenging to, compete with the Crown Corporation, because at the end of the day, the Crown Corporation can dig as deep as they need to dig, really.
Yeah.
They have an infinite pool of resources that they can really dip into, where the private corporations obviously have a finite amount of maybe money and resources that they can dip into. So I think they did find it challenging maybe in the early days. And I think the private corporations really focused on maybe more niche business, or maybe they may have dug maybe a little bit deeper for borrowers that maybe the credit wasn't as great, or maybe for maybe the properties that need an appraisal. And if CMHC wasn't willing to do it, then they would be kind of a second choice, even though they were all still a prime option. The interesting thing is the Canadian Mortgage and Housing Corporation actually provides 100% coverage to the lenders, where the private corporations only provide actually 90% coverage.
Why the same rate then?
Just the way that it goes, because at the CMHC actually backstops the private insurers as well. It's a very complex system that we run in Canada.
Yeah.
But believe it or not, in the US, they have a very similar system of high ratio insured mortgages. And they are really important specifically for first-time home buyers. They are the ones that are really enabling these first-time home buyers to get into the market and really helping any borrowers that don't have a 20% down payment. As you can imagine, as the property values increase, it's more and more challenging for borrowers even to come up with a 5% down payment, which is the minimum down payment in Canada. The two privately owned corporations, or private corporations, I should say, do some programs that the Canadian Mortgage and Housing Corporation don't run, or maybe don't run anymore. So, for example, let's say you're self-employed, and we need to do a product called stated income. The federal government agency doesn't offer that program anymore. The reason that they don't is because they don't want borrowers not claiming the income on their income tax, and really CRA collecting that income tax from them, but then also qualifying for a mortgage. I kind of get it, but there isn't parity between all three insurers. They're all slightly different, and the two private ones are, I would say, the most different from the Canadian Mortgage and Housing Corporation. But it's really great news that CMHC now has made the announcement to change their underwriting policies, and it's going to bring it back more into alignment with the other two corporations.
Excellent. So we've got a lot to talk about in the show, and I want to talk to you about investing in real estate investment properties. I think that's greatly important. Is that something you're up for?
It's certainly something I'm up for, and maybe that's investing in buying a cottage. We know it's summer season, so I'm sure lots of borrowers are interested about that.
Okay. Mortgage 101 with Clinton Wilkins and myself, Todd Veinotte, returns right after this.